Well, President Trump is expected to name a new Federal Reserve chair to replace Jerome Powell. The 5 candidates on the shortlist: Fed Governors Christopher Waller and Michelle Bowman, former Fed Governor Kevin Warsh, National Economic Council Director Kevin Hassett, and BlackRock head of fixed income Rieder. Federal Reserve Correspondent Jennifer Schonberger is here with a closer look at Kevin Hassett, the current frontrunner for that position. Hi, Jen.
Good morning, Julie. National Economic Council Director Kevin Hassett is seen as one of the frontrunners to be the next chairman of the Federal Reserve. He has a close relationship with President Trump, serving as his economic advisor. He also served during the first presidential term for Donald Trump. Hassett told me in an interview recently that he puts a high priority on Fed independence, sound money policies, and getting interest rates aligned with economic conditions. He told me he thinks the Fed has made some bad policy decisions that at times look to be partisan. He criticized the Fed for assuming that a spike in inflation around the pandemic and Biden-era stimulus checks was temporary. He also singled out that the Fed started raising rates when tax cuts were passed during Trump's first term, then cut rates right before the 2024 presidential election.
I think that there's a lot of house cleaning needs to happen at the Federal Reserve, and I'm confident that anyone the president chooses will get to work and try to fix it and make the Fed independent again.
Hassett shares President Trump's views that interest rates should be a lot lower than current levels. He says it would be a mistake for the Fed not to cut rates in December, given that he believes the government shutdown dented growth in the fourth quarter. Julie?
Thanks so much, Jennifer.
There was a period earlier this year when Kevin Warsh was viewed as the favorite to take over Fed Chair Jay Powell's job. While he's no longer seen as the frontrunner, many analysts do see him within the top 3. And Warsh has had plenty of experience navigating within the central bank. President George W. Bush nominated him to be a Fed governor, serving from 2006 until 2011. In fact, he became former Fed Chair Ben Bernanke's liaison to Wall Street during the 2008 financial crisis. Now, before serving at the Fed, Warsh was special assistant to President Bush for economic policy and an executive secretary at the National Economic Council, where he advised the president and senior administration officials on the U.S. economy. He's also worked in M&A at Morgan Stanley, and he holds a degree in public policy with a focus on economics and statistics from Stanford, as well as a law degree from Harvard. He is also a known figure to President Trump, who considered him to be Fed chair 8 years ago during his first term before ultimately settling on Jay Powell. Now, Warsh has been highly critical of the Federal Reserve, recently writing in an op-ed in the Wall Street Journal that the Fed should, quote, disregard its forecast of stagflation, arguing that it's overlooking that AI will be a significant force that will boost productivity and push down inflation. He has criticized Chair Powell for making, quote, unwise choices, such as missing the persistence of post-pandemic inflation. Warsh rejects the belief that inflation is caused when the economy grows too fast and workers get paid too much. Rather, he argues inflation is caused when the government spends too much money and prints too much money. Warsh also says he thinks that that he views tariffs as one-off increases in prices, a view echoed by both the White House and many members of the Federal Reserve. Warsh believes that the Fed's policies are actually holding the economy back right now, that the U.S. is in a housing recession. He believes that interest rates should be lower than where they currently are, and that the Fed's balance sheet should be smaller than where it is right now.
Christopher Waller, tell us all about him.
Yes, Christopher Waller. And the case for Fed Governor Chris Waller is that he's already a member of the Federal Reserve Board of Governors, and his views are in line with President Trump's. In fact, he was the first central banker to call for cutting rates all the way back in July after the Fed's meeting in June, and he was appointed by President Trump back in 2020. Taking a look at his bio and his path as to how he got to where he is, before the Federal Reserve Board of Governors. He served as the director of research at the St. Louis Fed from 2009 until December 2020. And in addition to his experience at the Fed, Waller served as a professor and chair of economics at the University of Notre Dame. He was also a research fellow with Notre Dame's Kellogg Institute of International Studies, and he served as a professor and chair of macroeconomics for monetary economics at the University of Kentucky. He holds a BS in economics from Bemidji State University and a PhD from Washington State University. Now, when it comes to his views, Waller supports cutting interest rates this month because he says he's more worried about the job market weakening than inflation accelerating. He believes that lower payroll growth is being driven by both weaker demand for workers and weaker supply of workers due to lower immigration, but he thinks that it's weaker demand that is the bigger issue than supply. Now, on inflation, Waller says that the data through September continue to show relatively small effects from tariffs, supporting his hypothesis that tariffs are having a one-off effect of raising prices and are not a persistent source of inflation. Excluding tariffs, Waller says he believes inflation is close to the Fed's 2% inflation goal. Now, after December, come January, while Waller has been calling for consecutive cuts, he believes that the Fed is going to need to take things meeting by meeting, so perhaps taking a more cautious approach there, whereas President Trump still thinks that rates need to be a lot lower than where they are right now. Julie?
Yeah, that definitely seems to be the consensus around his thinking here. So, Jen, the president might already know. He says he already knows who he wants to choose to be the next Fed chair.
Yeah, that's right. We heard from President Trump yesterday when he said during his cabinet meeting that he knows who he wants to pick. So before we had heard from him a couple weeks ago saying he probably knows. Sounds like he's more certain now. And he said, we're probably going to get an announcement early next year. We'd originally been told by Treasury Secretary Bessent, who's leading this interview process for the next Fed chair, that we were going to get an announcement sometime by Christmas. So that being pushed out into next year. We also heard from the president about Kevin Hassett yesterday, who is his, of course, National Economic Council director, and one who has been said to be the front runner and perhaps the president's pick. And media reports, he is also rated in Polymarket as the first choice. Take a listen to what the president said yesterday about Kevin Hassett.
And I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin. I want to thank you all for
You have it,
being
perhaps.
here. It's a great group.
Feeding fuel to the fire and narrative that Kevin Hassett will be the pick. But Treasury Secretary Scott Bessent was just interviewed moments ago by Andrew Ross Sorkin at the New York Times Deal Book Conference. And Bessent was asked about whether Hassett is going to be indeed the president's pick for the next Fed chair. And he sort of demurred, saying that he wanted to explain how much authority the chair has and influence over interest rates by saying it's really the committee that sets interest rates. And he also went on to critique the Fed, Bessent that is, pointing out that some of their regional officers are not from the regions that they serve, and that they should have to have lived in the regions that they are Fed presidents for at least 3 years. So that was a little bit of interesting information there, but still no concrete clues from the administration, as those of us here in the press really try to drag it out of them. Julie?
Yeah, I mean, that seemed to be a coy little clue on the part of the president, or maybe not so coy. Maybe it was a very obvious clue. I don't know. We'll see.
We'll see. I just find that we always think we know who it is, and then all of a sudden we get surprised. So it's very hard to handicap this.
Yeah, and like almost anything else with this administration, including the path of tariffs, et cetera, it's a long list. We don't have time to enumerate all of it. Thanks so much, Jen. Appreciate it.
Michelle Bowman is currently a member of the Federal Reserve Board of Governors, appointed by President Trump during his first term and elevated to the role of vice chair of supervision earlier this year. Like the president, she shares the view that interest rates should be lower, given what she sees as fragility and the job market. She has penciled in 3 rate cuts for this year and is expected to vote in favor of a rate cut next week. Now, when it comes to inflation, she sees a limited pass-through on tariffs and thinks that tariffs are only going to have a small, short-lived effect on inflation. Excluding tariffs, she believes that inflation is within the range of the Fed's 2% goal. Now, Bowman has been a member of the Federal Reserve since 2018. She was appointed to fill the remainder of an unexpired term and then reappointed for a full 14-year term that ends in 2034. Before joining the Fed, she served as the Kansas State Bank Commissioner and Vice President of Farmers and Drovers Bank in Kansas. She's also served as a policy advisor to President George W. Bush's Homeland Security Secretary and Director of Congressional and Intergovernmental Affairs at FEMA. She holds a bachelor's degree from the University of Kansas and a law degree from the Washburn University School of Law. Bowman's views align with other Trump-appointed financial regulators and the administration. She staunchly opposed former Vice Chair of Supervision Michael Barr's plan for Basel III to significantly ratchet up capital requirements on banks as much as 20%. She argued that the plan would significantly harm the economy and expected to roll back that proposal and put out a new proposal earlier next year that's more in line with the 2017 Basel Plan. She has also advocated for regulations tailored to banks based on their risk profile and size. Now, when it comes to Federal Reserve Bank independence, she says that is critical for the Fed to make monetary policy decisions independently, though she also says that the central bank needs to be transparent and held accountable for the decisions that they make.
Federal Reserve Correspondent Jennifer Schonberger here now with a closer look at the final pick on our list, Rick Rieder.
That's right. The 5th and final pick. Rick Rieder is a bond guy. He heads up fixed income for that mega money manager BlackRock, overseeing $2.4 trillion with a T in assets. He served as vice chairman of the borrowing committee for the U.S. Treasury, as well as a member of the Fed's Investment Advisory Committee on Financial Markets. Rieder spent a large chunk of his career at now defunct Lehman Brothers, where he oversaw the investment bank's global proprietary investment platform and headed its credit business. He holds a degree from Emory in finance and an MBA from Wharton. Rieder thinks the Fed can and should cut rates next week, and in a recent interview with Yahoo Finance's Julie Hyman, he acknowledged that inflation is running higher than the Fed's 2% goal, but had this to say as well.
I have a stronger view that I think labor is a tricky thing from here, and I think there is significant displacement on labor that we're going to see over the next couple of years.
Excluding jobs created in healthcare, Rieder says he believes that job growth has been negative in the spring and summer months, and he believes that is a trend that is going to persist. Though he says he hopes the economy remains resilient, he believes the economy is in good shape now and that companies are in great shape, but that labor is a bit weak.